So I have created a PowerPoint presentation, basically breaking down the Forex market through my eyes to be able to better explain and teach everything of all the knowledge that I've accumulated over the past 5 years. And if you have not watched our first video, going over support and resistance, I highly recommend you go check that out. However, if you don't need to go over support and resistance and you kind of are struggling with your trend lines, understanding trends, that's the video that we will be doing today. Okay, that's what we will be covering today. So let's go ahead and make sure you guys can see. All right, this is where we left off yesterday. All right, we're gonna get straight into it. Okay, we're getting straight into this now. In order to understand Forex market movements, you must understand trends. All right. The importance of trend recognition is very simple. All right. How do you know when price is low or high? You ask yourself, okay, we buy when it's low, we sell when it's high, right? Yes. But how do we know? What are these things called? What is the movement called? Excuse me, I'm going to explain that to you today. We have three main trends in technical analysis. You have an uptrend, a downtrend, and consolidation. This is not just for cryptocurrency. This is not just for Forex financial instruments. This is for any chart displayed data that revolves around the economy. This is the principle that is used. So everything you're learning, it doesn't have to just be for a UJ, doesn't have to just be for a NASDAQ. This can be used for trading Apple stock, Home Depot stock, Solana coins for my cryptocurrencies, like my crypto traders, right? In an uptrend, you have what's called higher highs and higher lows. A downtrend is the opposite, where you have lower highs and lower lows. And in consolidation, we are experiencing what's called a sideways trend, where price is stabilizing within a certain range. Okay. And, there's no real clear direction, right? You just know this is the high and this is the low. And you get tripped up because you're like, it's not a clear downtrend. It's not a clear uptrend. I'm going to just buy and just hope for the best. And then you see the market going up. Then it goes back down. And you're like, oh my God, you start to go crazy because you don't understand a true trend is established on higher time frames. Okay, just a little nugget for maybe my advanced that kind of just needed to hear that, and then you could just. But yes, your strong trends will be on the higher time frames, and if you're experiencing consolidation on a lower time frame, consider changing time frames, or consider maybe not entering into the market just quite yet. Maybe the market is just not ready because it's stabilizing. It's indecided or undecided. I just trade, okay? So, oh, goodness gracious. So, market influence is very important for my beginner traders to understand. All right. When we talk about market influences, social media plays a big role in the volatility that comes, especially with the cryptocurrency. So, within the past few decades, large corporations and institutions alike have realized that from just a tweet, from just the emotion of what will be, what may happen, price starts to change. Anybody in sales will understand this. Buying is not a logical process, it's very emotion based. So, your marketers, your huge tech giants, they play on your emotions and they play up to, your imagination, your creativity to make you pay. Okay. Now, we went over this in my last hands-on activity. If you did not watch that. I definitely recommend watching that because it will help you break down support and resistance. For those of us that did watch it, you will see, right? This might make a little bit more sense, okay? We're at our resistance level. This is the same exact chart. This is in candlestick form and this is in line form. My beginners, look here. My advanced, look here. This is our high, this is our low. Beginners, this is our high, this is our low. All right? Excuse me. So with TradingView or any trading view, you are going to be able to realize that the market has highs and lows that it creates. And TradingView basically just displays what that price movement looks like and what price has done in the past. That's all TradingView is doing. That's all this line is doing. That those bars with sticks poking out of them that people are calling candlesticks that you hear about, your swing highs and your swing lows. Okay. Today, we will be focusing on the trend. As you can see here for my beginners, here's a low. Will you agree? And then we have a high point here. And then we have a low. But this low compared to this low is higher. Signaling what? An uptrend. Okay. So my higher and lower time frames. I said this in the previous video and I'm going to say it again. Okay. Shout out to ChatGPT. Why lie? I asked ChatGPT to break down higher and lower time frames, to my beginners. Okay, I want you to think of your higher time frames as your skyscraper. Think of the building of a skyscraper. Okay, it takes more time for the candlesticks to be created because, as you can tell with your time frames, each candlestick that you're seeing here is that much time. So if you're on a 4-hour time frame, what does that tell you? Each candlestick is 4 hours worth of time, worth of price movement. Okay. Your strong support levels will signify where price will react based off of previous data. So marking your support and resistance levels on your higher time frames will give you the confidence to know that we are entering or we are approaching an area where the market will react. Why? Because it did before. All right. And we go into, deeper how to find your stronger structure levels to ensure consistency and profitability in the previous video. So definitely check that out. All right. My lower time frames, like my 30, my 15, my 5-minute, or even 1-minute time frames. Okay. They provide your detailed insight. Think of the steps within a skyscraper. All right. Some people are going up one step, then going down one step to then, have another task to do to go up 3 more flights of steps to talk to HR or whomever. They show you what's happening right now. Why? Because we're closer to real time. Because each candlestick it's 15 minutes worth of time. So if each candlestick is worth 15 minutes of time, that means that, let's say right now it's 2:21 p.m. 15 minutes ago, don't quote me, because I never claimed to be a mathematician. 15 minutes of time was roughly 2 o'clock. So if I was to go look and see what happened at 2 o'clock, it would be recent. More retail traders, they prefer to enter into the market on lower time frames because you will be then ensuring that you're going to enter in at the lowest level possible for a buy, because we buy low and we sell high. Okay. Now, let's quickly go over the trend phases in the Forex market and what their names are. All right. Now, with my lower highs and my lower lows signaling a downtrend, your downtrend is indicating decreases in price. Traders look to sell at lower highs and not lower lows. Why? Because quite literally, You don't know which structure level may just be that ultimate support that's just gonna completely put you up there, completely, set a different trend. So instead of entering at a sell here, why not enter here? Because we sell as high as possible and we buy as low as possible. So I want to sell here. I don't want to sell here. And I dang sure don't want to sell here. Right? You want to sell as high as possible. So that's why it's important to be able to see and identify your phases in the market. All right. Again, same thing with your uptrend. All right. You're looking to buy at your lows, buy at your higher low, not at your higher high. Okay. Profitability and confidence in trading will stem from you being able to truly grasp what you're looking at. Because at that point, you're just pressing buttons. Okay? So, let's go over the 3 main phases that are recognized and respected by traders. Okay? You have your pullbacks, your corrections, and your reversals. This is a perfect example as to what each of those look like. For my beginners, this is more beginner friendly, of course. All right. We are coming from an uptrend. Do you agree? This is a low. This is a higher low. This is a higher low. This is a high. This is a higher high. This is an even higher high. We were coming from an uptrend. And with the phases of an uptrend, you have what's very common, which are called pullbacks, because the market does not just go up. It goes up a little, then down, then up a little, then down, then up a little. Okay, to then repeat itself. However, it's creating higher highs and higher lows. So those are your normal pullbacks. Pullbacks are extremely normal. I prefer to enter into the market on pullbacks. So I will identify where the best area to pull back is. And I'll go ahead and enter into the trade because I want to enter in on any pullback, because the pullback means that it's going to give me the best opportunity and the best entry possible. All right. Once price gets to a strong support level, in this case, this would be resistance, right? Because price hasn't broke it. Price is going to try and break it. But price is respectful, and price will respect strong structure levels. So when price meets this area, this resistance area, and it comes back down and it's searching for, it's found a strong support. It's found a strong support. All right, I'm ready to try again. Let's correct that. Let's correct the mistake. I wasn't ready. Let's correct that mistake. This is a correction where you will experience equal highs and equal lows, which will give you what looks like a stabilizing market, also known as consolidation. But essentially, correction is what the principle is called. All right, that's what the phase is called. It's called a correction. You have equal highs and equal lows. Price is then like, oh, dang, that's a strong structure level. Let's go back down to this support. All right, and let's try it again. And it tried again, but the structure level was just way too strong. It was way too respected. We're going to have to find a lower support to then go up again and try again later. This is why patience is very important as a trader. So it tried again one more time and it said, you know what? No, I can't do it. And what happened in the past will happen again because price will respect itself. And then you experience what's called a reversal, when price is so tired of being wrong and not ready that price continues. Price will actually change its trend. So now we were coming from an uptrend. We had some consolidation. Price is trying to break. It's in an uptrend. It has momentum, but it's too strong. This structure level is too strong. It corrected itself. It pulled back, all these things. It's not happening. Not right now. Maybe later. So go back and try again. Anyone that played sports, coach just had you go back and try again. Go practice some more and, prove that you are getting off on the right foot. Find a better structure level for your floor, because this is not a strong floor. So price goes back down to find another floor. And it actually was strong. But that previous structure level was so strong that it actually changed its course momentarily. How many of us have heard certain things that completely made us reverse? We just said, I'm not going to even try anymore. Completely changed the trend. You were going up. And then people told you no, and this happened to you, and then that happened to you. And you try again, but it was a huge drop. It made a lower low. You got so discouraged, and you tried again. You did your best. But that was a strong ceiling. We've all been there. All right. So now you have what are lower highs and lower lows. Now we have what's called a downtrend. That structure level has now become a reversal level. All right. And don't get overwhelmed. All right. A lot of these words are interchangeable. If you understand the basics, which is why I want you to go through, okay, because a very, learn as you go. Everything is on purpose. Okay. So we're experiencing a pullback. Oh, here's a correction. Here's a reversal. This is a strong structure level because price completely reversed and changed its course due to this one structure level. All right. So I have a little example here that you can use to extract what you know and what you're learning to then apply. So if we have a downtrending market with a current pullback on a 15-minute time frame, would you sell or buy? Well, it's a downtrend. All right, check. Lower highs, lower lows. Cool, downtrend. All right, that's dope. It's pulling back. Well, we know that in a pullback, price is going to go down. In any trend, a pullback can be in any trend. It's not just exclusive to uptrends. So price pulls back and we're on the 15-minute time frame. What are you going to do? Are you going to sell or buy? You're going to sell because we're in a downtrend. Okay? And we will go over how to know where and when to get out of that trade, right? If you're selling or buying, when is the best time to get out of a sell or a buy? Where's the best place to set your sights to extract money confidently and consistently that you have been investing into your brokers? All right. So that's all I have for today, guys. This was a lot of fun, as usual. I am super, super, super blessed and so grateful that I'm able to come on here and really just give you guys all that I can in the best way I know how. I'm more of a visual learner. I dropped out of college to trade. And once I realized after trading on YouTube for so long, I've been live trading and doing all these things. And it was great. I was making money, but I wasn't fulfilled. Because I had to learn that money is not going to solve all your problems. It will solve some problems. It will solve a lot of problems, but it won't bring you true peace, joy, and contentment. Money, you can't buy love with money. You can't buy happiness with money. So I started to truly find my purpose and my calling in teaching people how to trade, especially younger people. So this is very beginner friendly, right? But it's for the young at heart. Those who are willing to learn, do their best, and just try, right? I'm here to help you. All right, you're not alone. So, with that being said, thank you guys so much for your time. Stay tuned for the next hands on activity that I have, where we will be going over trends, trend phases, and how to identify those, what they look like. And please, if you want to, comment down below what you think. What do you know? And if you want to also send me your markups or anything like that, or you just want to connect with me, follow me on Instagram. I'm very active there. I'm active here on YouTube as well. I'll post in the community post. So, don't be shy. Don't be a stranger. Trust me, I'm only here to help. Okay. So with that being said, thank you guys so much for your time, and I will see you in the next one. Bye.